Hello and welcome to our channel about cryptocurrencies. If you have been following the prices, you might have noticed that Bitcoin has once again surged to a new all-time high. At the time of the recording of this video, the price hit around 48,000 on most exchanges. Today's topic, the Bitcoin 4-year cycle. Today we will venture down the obscure path of price predictions and look at a widely used model that you should definitely know about if you are looking to invest into Bitcoin this year or already did. So first we'll look at the Bitcoin 4-year cycle, and then at the so-called stock-to-flow model from Plan B, which has predicted the market with an incredible accuracy of 95%. We'll look at where we currently stand, and at the end I will give you 6 tips that will help you invest in Bitcoin successfully this year. First of all, a small disclaimer. This is not financial advice. No human, regardless of how successful and respected he is, can predict the price of Bitcoin with certainty. Most predictions are just wild speculation. Some, on the other hand, put an incredible amount of effort into their predictions, doing a lot of research to create complex models. But even those, most of the time, are not correct. There are countless experts who try to predict the price of Bitcoin and fail miserably. You should be aware of this before you invest all your hard-earned money after watching this video. 4-year cycle. The basic idea behind the 4-year cycle is that Bitcoin halving happens roughly every 4 years. When the very first Bitcoins were mined in January 2009, it was already determined that there should be a maximum of 21 million. This is achieved by a model where fewer and fewer Bitcoins are produced. Bitcoins are created when miners find new blocks that are used for transactions. As a reward, 50 Bitcoins were issued at the beginning. This reward is halved every 2,100,000 blocks. This happens about every 4 years. The reward has now been reduced to 6.25 Bitcoin per block. Bitcoin investors usually split into 3 groups. The first group consists of people who invest in Bitcoin for the long term and try to hoard as much as possible. The second group consists of traders who try to make profits by constantly buying and selling. The third group is made up of miners. Of course, there are also many participants who can be assigned to all categories. Now it gets interesting for us. The miners belong to the group in the Bitcoin ecosystem that wants to sell their Bitcoins to be able to pay their current costs for mining and generate profits. So, if the amount of Bitcoin the miners get by finding new blocks is halved, the daily amount of Bitcoin they can sell is halved as well. If we make a rough estimate, we see that miners could have sold around 1,800 Bitcoin per day from 2017 to 2020, and only 900 Bitcoin per day from 2020 to 2023. If demand remains unchanged or increases, the price should also rise. This follows the classic rule that the price is always regulated by supply and demand. Bitcoin becomes more and more scarce through each halving as fewer and fewer new coins are added. Stock to flow. This very rough idea is of course only one possible reason for the price development. However, the theory of the 4-year cycle is also analyzed and prepared in great detail by the stock-to-flow model. The stock-to-flow model is an already known model, which is often used for commodities like gold. The stock-to-flow ratio describes how long it would take to produce the current amount of coins at the current production speed. According to the current data, gold has a stock-to-flow ratio of about 62, which means that it will take 62 years to mine the amount of gold that is currently available. This value is obtained by simply dividing the stock by flow. This means that if you divide the current amount in circulation by the current amount of production, you get the stock-to-flow ratio. We know that there cannot be more than 21 million Bitcoin in total, and there are currently over 18.5 million mined. Thus, the stock-to-flow ratio for Bitcoin is only of hypothetical nature, as it would not be possible to produce another 18.5 million. Currently, the stock-to-flow ratio of Bitcoin is 50.5, which means it would take over 50 years to produce the amount of Bitcoin, if one could, that is currently available. This indicator is often used to evaluate how rare a raw material is. The higher the number, the rarer a commodity is, as it will take longer to produce the existing amount of the commodity again. The impressive thing about Plan B's stock-to-flow model is the high accuracy which he was able to achieve when predicting the price of Bitcoin so far. In some articles, you can find statements that the so-called coefficient of determination, the mathematical accuracy of the Bitcoin predictions, are close to 95%. If we take a closer look at the model, then we can see that the price predictions are true but with certain deviation. The greater deviation can clearly be seen in the years where Bitcoin had bull runs and significantly exceeded the price predictions. However, I find it quite interesting that the largest outliers in the past tended to be positive, whereas in 2018, the model allowed itself a deviation of almost 100% into the negative. Of course, the model cannot predict what the price will be on a specific day, and even allows itself extreme deviations in this respect. But on average, the model gives us a very accurate prediction. Moreover, this prediction is based on real mathematics and real facts, and not on wild speculation. According to the current prediction, Bitcoin should now be around $30,000 and slowly moving towards 100,000, which is correct to some extent. For the next cycle, Bitcoin should reach 1 million. Where are we currently? Currently, we seem to be in the golden year of Bitcoin. Halving took place last year in May, and block rewards were halved from 12.5 Bitcoin to 6.25. Thus, according to the current cycle, we should see a significant price increase in late 2021 and a price decrease in early 2022. I can remember that about a half a year after the halving, a bullish rally usually emerges. Here, one must not forget that there are many other factors why Bitcoin can rise or fall, and some of those I will discuss in other videos. The past will not always repeat itself, yet a certain similarity can be expected. The important thing is that you now understand why everyone is talking about halving, and you understand that every time Bitcoin is halved, it becomes rarer. Now you might be thinking to yourself, sounds good, but honestly, I can't imagine Bitcoin at $1 million. This model is just insane. The idea that Bitcoin could be worth $1 million in 2024 is also insane to me, yet even back then no one could have ever imagined that Bitcoin would be worth even $10,000. The only thought or comparison that I can give you on this is the following. If Bitcoin were to reach a value of $1 million, it would increase its market capitalization to about $21 trillion. In comparison, all publicly traded companies combined have a market capitalization of about 43 trillions. Now, it's up to you to imagine such a money supply or value in a single digital currency. For sure, this is a really ambitious goal, but if there's one thing we have learned, is that Bitcoin can always shock us, positively or negatively. What do you think about it? Do you believe that Bitcoin could reach at least $100,000? Let's come to the conclusion and the tips I would like to give you for 2021. Bitcoin price predictions turns out to be quite difficult in most cases, and you should never bet everything on one single prediction, even if it worked well in the past. It is certainly helpful to have the Bitcoin 4-year cycle in mind for the following reasons. We are currently in a year where Bitcoin could see a big rise. Avoid entering the market at the end of the year, or you could run the risk of buying at the exact wrong time. Even if you don't believe in the model, or you want to pay less attention to it, don't forget the fact that a lot of market participants believe in this model. This fact alone could be a reason why many market participants are getting ready for a rising market and have positioned themselves accordingly. However, never get hung up on a concrete number. If you want to invest now and buy Bitcoin, you should only use maybe a third or a fourth of your position, and start scaling bit by bit. Use all sources of information that you can find. For example, I often look at all the negative opinions to understand all the arguments from both camps. The Bitcoin market is extremely volatile, and you should never go all in or spend money that you cannot afford to lose. That's it for today, guys. Thank you, and I hope you have learned something useful. And always remember to be careful with predictions and models, although it doesn't hurt to have them in mind. Thank you so much if you stayed up with us up to this point, and we would appreciate a subscription if you enjoyed our content. Feel free to also comment or like our video. This is CryptoTicker, and on this channel you will find many more detailed videos about cryptocurrencies, Bitcoin, or decentralized finance. I wish you great success and fun investing in cryptocurrencies. We're always available for questions in the comments. Make sure to also check out our Instagram, Twitter, and TikTok for more content. You can also join our Telegram channels, which I will link down below. Thank you, and see you later.